Welcome to our Hong Kong Brief Show, where we dive into the latest happenings around Hong Kong and beyond. Today, we've got a mix of finance, travel, and international relations on our plate. First up, Hong Kong's stock market saw a slight uptick thanks to gains in the insurance and casino sectors, despite some losses in tech. Over in the travel world, Singapore's Changi Airport has been dethroned by Qatar's Hamad International as the world's best airport, ending a 12-year streak. And on a more serious note, Japan has raised grave concern over Hong Kong's new national security legislation, marking a significant shift in tone from previous statements. Stick around for the detailed scoop on these stories. Please stay tuned for more details. In the bustling world of global markets and international headlines, stories of triumph, concern, and shifting landscapes paint a vivid picture of our interconnected world. From the financial heartbeat of Hong Kong to the prestigious rankings of the world's airports and the diplomatic corridors between Japan and Hong Kong, these narratives offer a glimpse into the dynamics shaping our global experience. Hong Kong stocks on the rise. In the vibrant city of Hong Kong, the stock market has shown signs of resilience and optimism. According to the South China Morning Post, the Hang Seng Index, a barometer of the market's health, edged up from a 5-week low, gaining 0.3% to reach 16,302.69. This uplift was driven by significant gains in two sectors, insurers and casino operators. Leading the charge was the insurance giant AIA, which saw its stock rise by an impressive 2.2%. Not far behind were the casino behemoth Sands China and Galaxy Entertainment, whose shares climbed 1.3% and 1.5% respectively. However, it wasn't all green. The food delivery platform Meituan and e-commerce group JD.com faced downturns, shedding 1.8% and 2% of their value. This mixed bag of market movements reflects the dynamic and ever-changing nature of Hong Kong's economy, set against the backdrop of broader Asian market trends. A new rain in the sky. Shifting our gaze from the bustling streets of Hong Kong to the skies above, a significant change has occurred in the realm of air travel. Bloomberg reports a momentous shift in the aviation world, as Doha's Hamad International Airport has been crowned the world's best airport for 2024, dethroning Singapore Changi Airport after its 12-year reign. This accolade is a testament to the excellence and innovation that Hamad International has brought to the global stage. Meanwhile, Seoul Incheon has been recognized for its family-friendly amenities, securing the third spot, while Tokyo's Haneda and Narita airports round out the top 5. Notably, Hong Kong's airport made a remarkable leap, ascending 22 positions to claim the 11th spot. This reshuffling of rankings highlights the competitive nature of the aviation industry and the continuous efforts of airports worldwide to enhance passenger experience. Japan expresses concern over Hong Kong legislation. On a more somber note, the political landscape between Japan and Hong Kong has been marked by tension and apprehension. The Diplomat reports that Japan has voiced grave concern over the new national security bill passed by Hong Kong's Legislative Council on March 19. This statement signifies a notable shift in Japan's stance, moving from expressions of regret to openly articulating deep worries. Japan's apprehension is rooted in its significant investments in Hong Kong, particularly within the financial sector, underscoring the potential implications of this legislation on international business relations and the broader geopolitical context. The Chinese government's sharp rebuttal, accusing Japan of meddling in its internal affairs, adds another layer of complexity to this unfolding narrative. Observers and stakeholders are keenly watching for further developments, as the situation has broader implications for regional stability and international diplomacy. Together, these stories weave a tapestry of economic resilience, competitive excellence, and geopolitical intricacies. From the financial markets of Hong Kong finding their footing amidst uncertainty, to the shifting sands of global aviation supremacy, and the delicate dance of diplomacy and national security legislation, these narratives underscore the multifaceted and interconnected nature of our world. As we navigate these complex dynamics, the stories of cities, airports, and nations remind us of the constant evolution and adaptation that define our global landscape. In the vibrant city of Hong Kong, residents are currently bracing themselves for a bout of intense weather conditions, as reported by the South China Morning Post. The Hong Kong Observatory has issued warnings for severe thunder, wind, and heavy showers expected to lash out over the next few days, with the rainy spell anticipated to stretch into the coming week. Amidst the downpour, the city will experience mainly cloudy and hot conditions during the day, with temperatures soaring to a maximum of 31 degrees Celsius, 87.8 Fahrenheit. This weather pattern isn't confined to Hong Kong alone. The coastal areas of Guangdong are also set to face similar rain and hot weather conditions. A trough of low pressure looming over southern China is the culprit behind this unsettled weather, promising heavy showers and thunderstorms in its wake. For those in Hong Kong, temperatures will fluctuate between 24 and 31 degrees for the next 9 days, adding a layer of unpredictability to daily life. On a different note, the South China Morning Post also highlights a significant development in Hong Kong's professional landscape. Last year, the city attracted nearly 2,000 professionals, each earning 10 million Hong Kong dollars, 1.27 million US dollars, or more, under a government scheme aimed at drawing in talent. This influx of high-income professionals is not just a testament to Hong Kong's allure, but is also expected to spur job creation within the city. Experts believe that these affluent newcomers could significantly contribute to the local economy by establishing companies, thereby creating more employment opportunities. The city's high educational standards and the value of Hong Kong passports are among the key factors attracting these global talents, marking a promising trend for the city's future. In the realm of cultural exports, the South China Morning Post sheds light on an ambitious Chinese piano brand, Pearl River, that is making a play for global dominance. The Pearl River Piano Group, a luminary in the Chinese market, is now setting its sights on expanding its international sales as it faces slowing growth domestically. The company has embarked on an aggressive strategy to boost its international revenue to 30% of its total sales, a move that includes the hiring of a marketing specialist. Convincing the global market of China's capability to produce high-quality pianos has been a challenge. To counter this, Pearl River acquired the German piano maker Rittmüller in 1999 and began integrating German craftsmanship into its production processes. The creation of the Kaiserberg brand, aimed specifically at the international market, represents Pearl River's commitment to quality and global appeal. Despite these efforts, the company witnessed a 32% drop in revenue year-on-year in 2023 to 1.13 billion Chinese yuan, $160 million, with profits plummeting by 95.2% to 60 million Chinese yuan. The decline in the Chinese piano market, attributed to a decrease in musical instrument learners and a sluggish economic recovery post-COVID-19, presents a significant challenge for Pearl River as it aspires to rival global giants like Yamaha and Steinway. From weather woes to economic ambitions, these narratives from the South China Morning Post paint a multifaceted picture of Hong Kong's current state. Whether it's battling the elements, attracting global talent, or striving for cultural and economic influence on the world stage, Hong Kong continues to demonstrate resilience and ambition in the face of challenges. In the bustling world of technology and finance, the path to profitability and market stability is often fraught with challenges and unexpected turns. This is particularly evident in the recent struggles faced by China's autonomous driving sector and the fluctuations in Asian financial markets, alongside the promising surge in tourism as the May Day holiday approaches. Starting with the realm of autonomous driving, as reported by the South China Morning Post, the journey towards a future dominated by self-driving cars is proving to be more arduous than anticipated. Chinese firms, ranging from behemoths like Alibaba-backed Banma Network Technologies to smaller startups, are finding the road to profitability bumpier than expected. Despite the allure of revolutionizing transportation and the hefty investments poured into developing these autonomous systems, turning a profit remains an elusive goal. Banma, in a bold move to steer the company towards commercial success, replaced its CEO, signaling the urgency to shift gears towards monetization. Similarly, Baidu's Apollo, an open-source autonomous driving platform, despite its technological advancements, is grappling with the challenge of turning its innovative vision into financial gain. This struggle underscores a broader trend within the sector, where the promise of fully autonomous vehicles is yet to align with the economic realities of the market, especially when contrasted with the booming electric vehicle sector in China. Shifting gears to the financial markets, Bloomberg reports a more optimistic scenario in Asia as stocks began to rise, buoyed by efforts to counteract a stronger dollar. The yen and won, Japan and South Korea's respective currencies, experienced a resurgence against the dollar after a period of depreciation that had raised eyebrows among financial ministers and the U.S. Treasury Secretary, Janet Yellen. A joint statement expressing serious concerns about the weakening of these currencies led to speculation of a coordinated intervention, which in turn helped stabilize the financial markets in the region. This move not only restored confidence among investors but also resulted in a notable improvement in the stock markets across China, Japan, Australia, and South Korea. The dollar index's decline for a second consecutive day further underscored the effectiveness of these collaborative efforts in fostering a more stable and optimistic financial environment in Asia. Meanwhile, as the financial and technological landscapes navigate their respective challenges, the tourism sector in China is poised for a remarkable rebound. According to the South China Morning Post, the upcoming May Day holiday is expected to usher in a tourism boom, with early bookings already surpassing pre-pandemic levels. This anticipated surge in travel is not only a testament to the sector's resilience but also a significant boost to China's economy through increased consumption. Hong Kong, in particular, is emerging as a favored destination for Chinese travelers, indicative of the pent-up demand for travel experiences after prolonged restrictions. The spike in domestic airfare orders and hotel bookings, especially in smaller county-level cities, reflects a broad-based enthusiasm for travel. Furthermore, the increase in visa fee charges for outbound trips exceeding 2019 levels signals a robust recovery and a promising outlook for the tourism industry. In summary, the landscape across China's autonomous driving sector, Asian financial markets, and the tourism industry presents a mixed bag of challenges and opportunities. While the journey towards profitability in autonomous driving remains uncertain, the financial markets in Asia show signs of resilience and recovery. Simultaneously, the tourism sector is on the brink of a significant comeback, promising to invigorate the economy and satiate the wanderlust of countless individuals. Each of these narratives, from technological advancements and financial market dynamics to the resurgence of tourism, contributes to a broader understanding of the complexities and potential within these interconnected sectors. In an era where technology and sustainability are reshaping the global landscape, countries and economies are strategically positioning themselves to navigate the complexities of the 21st century. From the bustling streets of London to the dynamic markets of China and the volatile cryptocurrency exchanges, the world is witnessing pivotal transformations that promise to redefine our future. Starting in the United Kingdom, The Telegraph reports on a significant policy shift aimed at safeguarding economic security and technological sovereignty. The British government, led by Deputy Prime Minister Oliver Dowden, is tightening the reins on the export of quantum computing technology to nations deemed hostile, including China. This move is part of a broader review of exports and overseas investments by British companies, particularly in sensitive sectors such as cryogenic equipment, semiconductors, critical minerals, and artificial intelligence. The concern is palpable. Advanced quantum computing technology, if fallen into the wrong hands, could potentially enable hackers to bypass the security of Western IT systems, posing a grave threat to national and global security. Meanwhile, across the globe, China is embarking on an ambitious journey towards economic transformation, driven by a commitment to sustainability. As reported by the South China Morning Post, China's target GDP growth of around 5% reflects not just a response to a slowing economy, but a strategic shift towards a more sustainable development model. Authored by Lu Bun-chong, the article highlights how China is deploying moderate stimulus measures to strategic areas such as water conservancy, disaster relief, and clean energy transition. Remarkably, China's pivot to clean energy is expected to contribute a staggering 40% to its GDP growth by 2023. This transformation is underpinned by the issuance of an ultra-long $139 billion bond to fund 15,000 water conservancy and disaster relief public projects, signaling China's resolve to harmonize economic growth with environmental stewardship. Amidst these geopolitical and economic shifts, the world of cryptocurrency is facing its own set of uncertainties and opportunities. Nikkei Asia sheds light on the upcoming halving event in the Bitcoin ecosystem, a phenomenon that will see the reward for mining new coins slashed in half. This event, expected to induce volatility in the cryptocurrency market, has historically led to a surge in Bitcoin prices, with some analysts predicting a potential rise beyond $75,000 this year. The recent approval of Bitcoin spot exchange-traded funds in the US and Hong Kong has further fueled optimism in the market. However, not all is rosy in the crypto world, as tensions in the Middle East and other geopolitical uncertainties could prompt investors to liquidate their Bitcoin holdings, adding a layer of unpredictability to the market's trajectory. These narratives, unfolding across different corners of the globe, underscore the intricate interplay between technology, economic policy, sustainability, and market dynamics. The UK's crackdown on quantum computing exports to despotic regimes reflects a growing awareness of the strategic importance of technology in national security. China's embrace of sustainability as a cornerstone of its next economic transformation highlights the pivotal role of environmental stewardship in shaping the future of global economies. Meanwhile, the Bitcoin halving event illustrates the volatile nature of digital currencies and the complex factors that influence their value. As the world navigates these transformations, the underlying message is clear: the future will be shaped by how nations, economies, and markets adapt to the challenges and opportunities presented by technology, sustainability, and global interconnectedness. Whether it's through tightening export controls, investing in sustainable development, or navigating the volatile waters of cryptocurrency, the path forward requires a delicate balance of innovation, strategic foresight, and responsible governance. In recent times, the tourism landscape across Asia has been buzzing with remarkable developments and strategic moves aimed at reviving and boosting the sector post-pandemic. From the record-breaking influx of tourists in Japan to innovative tourism drives in Hong Kong, the narrative is one of resilience, creativity, and significant economic impact. Nikkei Asia reported a groundbreaking achievement in Japan's tourism sector, with the number of monthly visitors to the country surpassing 3 million for the first time in March. This surge in tourism didn't just mark a milestone in visitor numbers, but also led to a record-breaking quarter in terms of tourism spending. The weak yen emerged as a catalyst, encouraging tourists to indulge more in services and experiences, thus pumping more money into the local economy. However, this boom has its downsides, as the influx of tourists has led to price hikes and created challenges for residents in popular tourist destinations. Despite these hurdles, the Japanese government remains optimistic, eyeing an ambitious target of 15 trillion yen, $97 billion, in annual tourism spending by 2030, a goal that now seems within reach. Meanwhile, in Hong Kong, the Tourism Board embarked on a bold initiative to invigorate the city's tourism scene, as reported by the South China Morning Post. In a strategic move to attract global attention, over 2,000 individuals, including influential social media personalities and international celebrities, were invited to explore Hong Kong and share their experiences. These influencers and celebrities took to various platforms, producing videos that showcased the city's allure, reaching an audience of over 200 million viewers across 3,000 platforms worldwide. This innovative approach to marketing, however, raised eyebrows regarding the campaign's cost to taxpayers, with calls for greater transparency in government spending. Despite the controversy, the Tourism Board plans to continue its thematic promotional efforts, though the specifics of the budget remain under wraps. Adding another layer to Hong Kong's tourism and cultural narrative, the South China Morning Post highlighted an intriguing proposal for the adaptive reuse of infrastructure. A disused COVID-19 isolation center, situated in the Kai Tak area, is being considered for transformation into a creative hub. Bernadette Lin Hanho, the Secretary for Development, shed light on the potential repurposing of this site into a base for cultural and creative industries, alongside other short-term projects. This initiative not only reflects a strategic pivot towards leveraging existing resources for cultural enrichment, but also addresses concerns about the financial upkeep of such facilities. By dismissing the notion that maintaining these isolation centers is a wasteful expenditure, the government underscores its commitment to exploring innovative uses for these spaces, aligning with broader goals of fostering creativity and enhancing the city's appeal. These developments across Japan and Hong Kong exemplify the dynamic and multifaceted efforts underway to rejuvenate the tourism sector in Asia. From leveraging currency dynamics and international influencers to repurposing infrastructure for cultural purposes, the strategies employed are as diverse as they are ambitious. As these efforts unfold, they not only aim to attract tourists and stimulate economic activity, but also spark discussions about sustainability, transparency, and the balance between growth and community well-being. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.